Hey, good morning, Advantage members. Happy Hump Day. It's Wednesday, May 3rd. And we have a little bit of movement in the crypto markets. So again, today's a pretty important day because we have the FOMC rate hike announcement. Again, more than likely is going to be a rate hike, right? I think more and more people have been talking about how Jay Powell has made it clear that there's going to be a 25 basis point hike today, as well as maybe even another 25 basis point in June, if I'm not mistaken. So that could kind of pose some volatility and maybe even some, near-term downside in the market. What we're seeing already is a little bit of, pullback in the market, especially given what happened here starting off Sunday. We had this kind of, almost like a double top scenario and then sell off, right? So that kind of tells us that the market here is in a very murky, messy area. And, we need to be paying attention to the market from a different perspective, which is, if today's meeting really shakes down the market and breaks through key levels. Okay, so here's the simplest way to look at the market right now. First, kind of let's look at key levels, right? So we have VWAPs that we look at. We have daily opens, weekly opens, monthly opens, etc. You can kind of see here's the weekly open way the heck up here. This is the 2021 yearly open that we generally watch, right? And then we have price currently trading below the weekly VWAP, daily VWAP, monthly VWAP, as well as quarterly open, which is around 28,400 and some change, right? So all in all, what that kind of tells us is the market is in a pretty messy situation where we've kind of tilted more to the right side and down. And what that indicates to us is that, okay, the market is, not looking great, right? Does that mean that from here, we're going to take a straight nuke down? Maybe, but again, we have some levels that we generally look at, right? So on a 4-hour, 12-hour basis, this is kind of our range that we've been contending with for the last, I think almost like the last month and a half, 2 months, right? Going back all the way till mid-March, okay? You can kind of see we're sitting below a pretty important level, which is 28.5 as per this range, sitting right on top of the 28.2, okay? For the most part, I think the most important part of this area is 28.5. If we start breaking down, then, I'm kind of expecting a slice all the way down to 26.5 and maybe even, all the way down to 25K. And I've talked about why 25K, simply because you can kind of see this yellow line, right, going across. That's the weekly tap here in August 2022, February 2023. And if we come to the downside and tap it, that would be sort of a weekly SR flip, right? And again, in my experience, right, you generally don't want that. You don't want a market to come back all the way deep into a weekly level, come back and tap it. It's just like not necessary. When the market breaks away from a range and breaks out of a resistance point, it just needs to start floating up and just start continuously moving up, right? That is sort of the ideal condition for a market to show its bullish strength. Let other people catch up and chase price upward. Now, that doesn't really seem like it's broken, nor does it seem like it's not happening, right? It just seems like, okay, price is doing something here and it's consolidating, but you don't really want it to consolidate too much, because if it does break, it can get ugly, straight slice to 28K, maybe even lower, and that could be obviously an ugly scenario, like I said before, right? If and when we do break inside 25, it's, pretty much a straight slice down to 18K for me. Okay, but again, we're pretty far from that scenario, so I'm not going to talk about it too much. All right. The other things that are going on, ETH kind of, chopping about, taking out some SR levels here. Again, breaking back inside the weekly pivot right there. Same thing with BTC, actually. Like if you look at BTC here, BTC is also breaking inside this weekly pivot. It came back, rejected it, sold off back inside, right? So all in all, today's FOMC meeting right here, I think is going to pose a decent amount of volatility. I think what we need to look out for is this area being a trap, meaning price goes up, squeezes shorts, and then breaks back down, or this area being a trap, which is price goes down, people are baited to short, and then it squeezes back up. This is a very common theme that happens in FOMC times, which is volatility up squeezes and then down squeezes, or first down squeezes and then up squeezes, right? It is simply because it's all about positioning and exploiting the positioning, really exploiting the people who are taking excess risk. Okay. So in that situation, I want you guys to look out for both scenarios. Both pose an equal amount of risk, in my opinion. I will not really be doing anything. All I did yesterday was, or rather the last 2 or 3 days, especially since the weekend, I had this BTC long, didn't really work out, right? I was kind of taking a stab at the entry of 29.6 on Friday, if I'm not mistaken, last Friday. I saw dominance looking good. I saw BTC price maintaining above the weekly level, right? And by the time Sunday came around, I was like, okay, well, this doesn't really look good, because price started to break down right after that weekly open and boom, sold off. Okay, so I got stopped out at 3.6% loss, but not really a whole lot else I can do. I gave a shot to the bulls to sort of prove to me that from here, actually, I'm sorry, I think I got into the trade somewhere back here, and we consolidated most of the weekend and we squeezed up, but that was a fake out, and then we nuked, right? So in that situation, what I really should have done is, what I should have done actually, again, hindsight's 2020, I should have raised my stop from here all the way up here when I start seeing price, sort of tighten up and coil up in this consolidation. Generally, that's what I like to do. Unfortunately, I wasn't actively watching the market over the weekend. I typically don't, but I should have. But this is what happened. We squeezed up, and as soon as we squeezed up, I should have moved my stop from here right into here. That is how you actively manage a position. And because I didn't, obviously, I took a slightly bigger loss, which is, getting stopped out at 28.5 down here. But all is good, right? After that, what I decided was, and again, getting screwed by both sides of the market, I tried the other way around. I was like, okay, well, my trade is invalidated. And so that means that the market looks like it's pretty damn weak, and it's probably going to head down further. And I kind of gave it a shot. I said, okay, let me take on a position at a BTC short. I think I took it somewhere right here around the breakdown. We broke down, right? So my trade thesis was like was validated. And then we shot back up just yesterday. Again, this is what this FOMC volatility does, right? It just like makes you just really, let's just say, puke when it comes to, overall up and down chop. And that kind of volatility is just, it makes you question many things, get in and out of positions, good positions, bad positions. And so I kind of just closed that trade out, 1.4% loss. So all in all, I kind of took a 5% hit on BTC short and BTC longs, but again, nothing massive, not really putting account at risk or anything, but it's enough to kind of just say, all right, maybe we should just stop, right? Maybe I should just stop and really rethink what I think the market is going to do. And personally, to me, I'll be completely honest, I still am fairly convinced that the market here looks weak. And I think it's going to break down at least to 26K. But if, let's just say today, right, the market does not end down lower, or by the end of the week, it does not end down lower, then you can make the argument, oh, these are series of higher lows, and then this thing is going to take, a moonshot up to 32K. Yeah, I mean, you can make many different cases, right? And so I'm going to stay nimble, and I'm going to stay flexible and open to what happens with the market. I'm not going to question it too much, and I won't fight it. That is, I think, probably the best way to trade the market right now, given how choppy it's been, especially given, how kind of look at, S&P 500 or other assets. They're just very sort of choppy and murky around this area. So best to be cautious. All right. Other than that, I mean, again, sort of maintaining still my Solana position, which, by the way, I actually did cut in half, kind of like at a 1% loss or 1.5% loss, simply because, I had a larger position, 2.0%, and then I cut it into 1.0, simply because, I was given sort of that opportunity, right? When you get that opportunity to cut your position at a slightly lesser loss, and then, maintain your core position or something like spot, I'm okay with doing that. And I cut it right into the pivot, right? So for me, it was like a reasonable area to cut. So all in all, staying, flexible in the market, looking out for still, my spot positions, which I want to hang on to longer. And then looking at key events like the FOMC, unemployment data that's coming out Friday. And then I think Thursday, I think we have actually Apple earnings. So that's probably a pretty important one too. All right. That's pretty much it. You can kind of see from Kaiko data, right? This is a liquidity on BTC pairs as well as ETH, USD, USDT pairs, right? This is definitely not really a good thing, because when you start seeing liquidity sort of drop off, it just means that there's less and less players involved in the market, and it just means that, you can see more shenanigans in price and, more liquidations or more price hunting, et cetera, et cetera. So anyway, be cautious. All right. Thanks, everybody. Cheers.